So some of the customers that are attracted by our product are net new to the agency, but many
Yeah.
of them are already the agency's customers, right? They're in their parents' auto
Yeah,
policies.
that's true.
And they would have, ended up online somewhere. And then, as an agent, 8 years later, you'd be competing with Progressive's $2 billion of ad spending and
Right.
Geico's, $1.5 billion. And doesn't that sound great, right?
Yeah.
It just doesn't make any economic sense either. So things need to change for
Yeah.
sure. But there are really encouraging signs that things are changing, right?
Yeah.
And that's pretty exciting. I'm Kate Terry from Surround Insurance, and this is the future of insurance.
This episode is brought to you by Medallia, the market leader in customer and employee experience. Their award-winning SaaS platform, Medallia Experience Cloud, makes all your other applications customer and employee aware. Medallia uses proprietary AI and machine learning to reveal predictive insights that track powerful business actions and outcomes. Leading insurers like the Hartford and Farmers use Medallia to reduce churn, turn detractors into promoters, create in-the-moment cross-sell and upsell opportunities, and drive revenue-impacting business decisions. Learn more at Medallia.com. And the Future of Insurance book series, available exclusively from Amazon or at future-of-insurance.com.
Kate, thank you so much for joining me for the show today. I'm excited to hear some more. Since last time we talked, I know quite a few things have happened. It's probably been a year.
It's been a year, yeah. So
very close to lockdowns.
Yep.
We first talked.
That's right. So we've been locked in our houses for a year, and in the interim, we've launched this little insurance business.
Yeah.
How about that?
Give us a little sense of what is Surround and kind of the intention, and we'll start digging and picking it apart and learning more.
Yeah. So my co-founder Jay Grayson and I are both longtime insurance people. And we both have,
which is different for insurtech startups, right? Usually it's like all tech or half tech or
Okay. So let's go back to that, because when you're a hammer, everything looks like a nail, right? So let's go back to that. But let me tell you what we do first. So we're both longtime insurance people, 15 plus years of experience for both of us. And we saw a gap in the market, an underserved market, right? And what it was that, insurance, especially property and casualty insurance, has been very much built around things. I mean, it's in the name, property, right?
Right. Yeah, that's a good point.
Right. But young adults don't buy things anymore, right? It used to be that you finished high school, you finished college, your military service, you bought a car, and you went to mom and dad's insurance agency and you shook the insurance agent's hand, and now you had an auto policy that had a bunch of other stuff bundled in with it, right? That really has nothing to do with the car. Like if you're hit by somebody else in a car while you're on a bike and they're uninsured or underinsured, your own auto insurance policy responds. Why? Because it was a neat way to bundle things for people who bought a car when they were 22, right?
Yeah.
But we know young adults are delaying the purchases of cars and homes and engagement rings and everything else that's sort of durable, right? Partially because of economic situations and partially through choice, right? They're living in this like sharing, renting economy, and yet the products they need are not there for them. So we've built a starter pack of insurance from the moment you get taken off your parents' insurance policy to the moment you start acquiring those assets. So that's what we're doing. 4 minutes to quote and bind, beautiful UI, sold through independent agents, super quick and easy, and just sort of covers you. It's designed around your lifestyle, not you.
So you mentioned a few things that stand out that are, so 4 minutes I'm interested in, because when you hear like it's 2 minutes or it's seconds, this is multiple products then?
It is multiple products. So it's 3 separate products filed as a package that we can then configure in different ways. But it's a personal lines non-owned auto. So it covers you if you're driving a borrowed, rented, or shared car, because it turns out that you are liable, not necessarily the owner of the car if you're driving and you get in an accident, right? Second, a renter's insurance policy, which is a great kind of coverage and policy, but very limited in what it covers, given that auto accidents are much more prevalent even in people who don't own cars, right? And then a miscellaneous professional liability for a side gig. So all at $100,000 liability limits. I mean, in some ways, we've allowed insurance to become so commoditized that we end up competing on things that are silly. Like, would you like a $275 deductible or a $300 deductible? That's not a real choice. That is not a real choice. So we sort of eliminated all the fake choices from the product and just designed it perfectly for this segment.
Yeah. And I will say those kinds of choices are then marketed as customizing. And the reality is, like, first of all, that's not a unique or new idea.
No.
Different limits and deductibles, like that's been around for a minute, and that's not really what a custom policy is about.
No,
That's not
no.
covered. So, but I just find it interesting. I thought you were going to say umbrella or something still in the sort of like personal line space, but
Yeah,
instead you're recognizing what's different in the way these same target customers are living and working, where
yeah,
there's a side gig, or
yeah,
maybe it's their full gig, or they're working
maybe.
in a gig
Yeah,
capacity. But yeah,
yeah,
professional liability is more necessary in young adults
yeah.
than maybe 10 years ago or whatever.
Exactly, exactly. I mean, don't ask me how hard it is to build an MGA that has both admitted personal lines and admitted commercial lines, because I think if I knew, I would have cried up front. But
Yeah.
we did it, and we've got great partners. But what that also gives us the flexibility to do is to expand our own product offering. You can imagine other things like tiny BOP policy, annual travel policy, pet policy, et cetera. Or to partner with other carriers who are specialists in some of those areas, and to bring their product into our ecosystem and our quote flow. So we're negotiating with a couple of partners that have products in some of those ancillary spaces right now, right? And the thing about this too is that, non-owned auto, for example, is an excellent product for somebody who doesn't own a vehicle. And it's typically maybe 40% of the cost of, if you own your own vehicle, 30%, something
Yeah.
like that, right? It
Like the
depends.
liability side without
Yeah,
the property side.
yeah,
Yeah.
liability and UM/UIM often
Right.
more
Right.
premium than UIM. Yeah. The thing about it is that, most people don't really like to sell it, because basically if you're an agent, you have to go through the same process you would for an owned auto. There's just no vehicle on the policy, and there's no pricing sophistication. It's not a competitive market, even though it's like the perfect product,
Yeah.
right? So some of what we're doing is we're bringing together a bunch of lower average written premium products that are perfectly designed for this lifestyle, but are unattractive to sell on their own because the premium's so low.
Yeah.
Bundling them together so that the average premium overall, and therefore the commission is a little higher, so you can make a living,
Yeah.
but also making it so easy and simple compared to kind of traditional carriers products,
Yeah.
that the amount of time invested is really limited. And if
Yeah.
you think about it, if you can convert a customer who's 22 or 25, they actually have the highest lifetime value of any customer you're ever going to convert, right? So
Yeah, you're getting them nice and early. So the other thing that I wanted to dig into was
yeah,
the agent piece of it, and
yeah,
you're hitting on that with commission.
yeah,
This is like I talked about this in the first book, that the first day I set foot in Liberty Mutual, my first day in insurance, it
yeah.
was, did you hear like agents are going to be gone because this internet thing is
Right.
like, first of all, that dates me like when the internet was just becoming this internet thing.
Dates us both, but
Yeah,
that's all
but like
right.
you put out a great piece last year, and I think
Mhm.
in ITL, Insurance Thought Leadership, about
Mhm.
the agency channel, and I
Yeah,
completely agreed with you. And I think a lot of people do is, will it change? Will there be
yeah,
threats to it, or different
yep,
ways of transacting? Yes, but it's not gone, and I don't think it
no,
ever will be, nor
yeah,
really should it be.
yeah,
um, but it needs to be supported differently. And like, we
yes,
can't have, you can do something really fast and easy online, or
yep,
long, slow, and painful
yep,
in the, like, well, that's not a great trade-off. Is it like your
no,
deductible one? Like, that's not really a decision to
no,
make.
that's not a choice.
So how do we
Right.
support that? So I
Yeah,
like, that's why it resonated with me early on, is like, why can't you give better tools to the agency channel so they can still serve a different kind of customer, which will be all customers at some point?
yeah, yeah. Yeah, so there's so many directions to go here, but the assumption that the agent is dead is just silly. I mean, agents sell half of the property and casualty premium in the US,
Yeah.
more than a third of the personal lines premium, where products are simpler, right? And depressingly, if you work for a major insurance carrier, you go out and you survey your very own customers to ask them who their insurance company is, like 7 out of 10 of them will give you a company other than yourself, which
Yeah.
is totally depressing.
Yeah.
And of those 7, assuming you're talking to customers who purchase through the agency channel, like 5 of them will probably tell you the name of their agent. So
Right.
like the idea that that there's any customer out there who is not already an insurance person, who wakes up in the morning saying, today I want to buy insurance off the internet, not from an agent, is really silly.
Yeah.
What customers want is a specific kind of experience, right? They want, it to be easy to buy insurance. They want to be clear about what they're buying. They want to feel sure that what they've bought is the right thing. And my gosh, they want somebody to pick up the phone and answer a question with like a warm voice and some knowledge if they have a question, right? And I mean, the dirty little secret, but I've worked at 3 different carriers, so I'm not talking about anybody specifically here, but the dirty little secret is that most of those online quotes don't actually get bound online anyway, right?
Yeah.
People call even the direct to consumer carriers have massive call centers full of licensed agents, right? They happen to work for the company, but I mean, it's not like everybody's converting on the web anyway, because people do have this need for help when you're talking about a complex product, right?
Yeah.
Now, does the independent agency channel need to change? Heck yes, right? Especially when you're talking about kind of retail types of coverages, right? Like we're not talking about like boilers and foundries and whatever right now.
Right.
And, I think the agents are sitting in a really neat spot in a lot of ways. They're local businesses in the middle of sort of, a shop local moment, right?
Yeah.
They tend to be family businesses, even the very large ones, which is really attractive to a lot of younger consumers. Many of them are starting to get increasingly digitally sophisticated, and it's easier to be digitally sophisticated than it ever was before, right?
Yeah.
They can put out local content because they're real people and they live in the neighborhood, right?
Yeah.
But they need the tools and the products to do that. You can't take somebody who's found you online and then sees the picture of your location, says, oh, that's right, I drive by there every time I'm going to the grocery store.
Yeah.
And then they send you an email and 4 days later you respond. Like, that is not going to happen, right?
Yeah.
Nor can you send them 32 Accord forms to fill out and expect that that's going to be a good experience either. So things need to change for sure. But there are really encouraging signs that things are changing, right? And that's pretty exciting.
So I had Amy Shore on, who's the chief customer officer for Nationwide, and she made this point about a flight to value. And I'm thinking it means like good value for money, which she said it's a flight to value and to purpose, especially amongst younger buyers. And so when you say like, shop local is having a moment, purpose driven, supporting something, I think that's a really fair point, is like that sense of community. Versus like, they like smooth, easy online kind of processes, but there is this shift to like, well, why does that even matter? So what if you could combine like the smooth, easy process with something that reminds them, oh, there's a reason to care.
Well, and the idea of choice, which is kind of the whole thing about independent agents in the first place, right? I mean, I don't know how many carriers the average independent agency has in their office, but there are, maybe 3 to 8 that they write commonly. So, they can look and find the best spot for you. But those carriers have to actually offer the products that work for younger consumers too, right?
I'm thinking about the last time I was on the road going agent to agent. It was a while ago. It was when I was at McKinsey doing like a research study for a carrier. And we kept finding the carrier who had the biggest share policy count wise in like agency after agency was Progressive. And I was so shocked by that. I'm like, wait, but they do so much direct. And it's like, well, they do. And so in that sense, they're competing with the agents. But the reason why they were eating so much of the book was the simplicity of the process. So like the CSRs, who are really the ones choosing where a lot of those policies went, they're like, we could bind 5 Progressive policies and the time we'll get a quote from one other carrier. So like commissions lower, feeding someone who's, advertising to compete with you, but it was easy. So when you talk about a 4-minute process for an agent, that's like, oh, that's really compelling. And you've done it in a way that bolsters, like, it's not just a cheap, quick policy. It's a more holistic account that you're now thinking about the lifetime value of.
And I mean, yes, on the ease, right, and how important ease is. I think the other piece about it that's interesting is that if you think about it, some of the customers that are attracted by our product are net new to the agency, but many of them are already the agency's customers, right? They're in their parents' auto policies.
Yeah, that's true.
They literally are already customers.
Right?
Exactly.
They would have just gotten their own thing direct or from
exactly. Their landlord would have said you need renter's insurance, and they would have ended up online somewhere, and then as an agent 8 years later you'd be competing with Progressive's $2 billion of ad spending and Geico's $1.5 billion, and doesn't that sound great, right? It just doesn't make any economic sense, right? So I think there are a lot of especially sort of younger hungry agency principals, maybe who've taken over an agency and
Yeah.
are really trying to like do things differently and grow their book and kind of bring in a younger clientele or keep a younger clientele. That's really important, right?
Yeah. It's interesting because I think someone may not necessarily recognize the retention issue or the attrition issue because the account that they underwrote or that, they sold is still there.
Yeah.
But it's almost like the assets within it are
Yes.
escaping.
Yeah. And it's, I mentioned before, a lot of agencies are family businesses, but the way that they perpetuated was that, the agency was a family business, but their clients were families as well, right?
Yeah.
And there was this handover from parents to children, sometimes through 5 or 6 generations. Like some of these are some of the oldest businesses around in town, right?
Yeah.
And if that moment disappears because, a young adult doesn't buy a car right away, what do you do, right? And the other interesting thing about it is that this isn't really going to be such a surprise, but parents of young adults pay the bills for a significant number of young adults, right?
Yeah.
I think it's like more than half the people between 20 and 40 who work full time have their parents paying at least one bill every month. And
I was going to say that term young is
right.
fluid.
Young being 40 and younger, I guess. I don't know.
Yeah.
We're going to use that for the moment. But so it doesn't necessarily have to be a rupture in the sense of, oh, now we're making a sale to the adult child, now a client unto themselves. Instead, it's this sort of gray kind of area of relationship where who pays the bill could be the parents or could be the child. Could think of it like an endorsement to the parents' policy. Could say to the parents, we all know that call in the night is the most terrifying thing, right?
Yeah.
So this we can protect against. And, the cost is roughly the same as the credit you'll get by taking your kid off of your home auto insurance policy when they move out of the house, right?
Yeah, so thinking about from the family perspective, again, the family's sort of made whole or close to it, but is appropriately covered for what's really going on now.
Yeah, exactly.
As a father, I can also imagine, like, my son's too young, so I don't really have to worry about this yet. But knowing, when he's 20 something, like if I had an agent who I would call for myself to also know if my son's in trouble,
yes,
I can call the same person.
Yeah.
And I can help my son, through that process, in addition to knowing there's coverage in place for it.
Yeah, exactly. And I mean, if you've got an insurance agent you've been working with for a while, there's a lot of trust in that relationship, right? And that matters.
Yeah, absolutely. Well, it did strike me when we were first talking about this, I always like there being a sense of purpose behind something versus like, oh, this industry is slow and old and we can just do better. It's like, well, what does better mean? Why do you exist?
Like,
so
no.
There's a purpose to it.
Right. There is a purpose. And I mean, there's a purpose, like kind of why I'm in insurance. It's not because like I was looking for a job and only the insurance industry was hiring. It is not, right? I mean, it's that there's fundamentally something right and good about what we do. I mean, life is inherently unfair. I can't control who's going to get into an accident today out on the road. I can't control who's going to get sick today, but I can be there to help put them back together, right? And that's like good work. And this is good work that we're all doing, and we can do better, right? Like we let things like old systems and old mindsets and matrix organizations get in the way of us serving people better. So like that's the higher calling of what we're doing,
Yeah, I love that. All right, well, I had asked you about, or I'd broken into your background piece when you said like we're both insurance people. Let's go back to that because it's not as common in the insurtech startup space for everyone to be insurance-y.
Right.
So tell me a little bit about, more of that, the profile, and how do you find the right skill set? How has that served you, where maybe there are gaps or?
Yeah. So it turns out that insurance people are risk averse. I think that's shocking, right? And I think that's why there haven't been as many insurance founders, at least not early on, right? I mean, most of the early insurtechs were people who are successful tech founders coming in saying insurance is broken and we're going to fix it.
Yeah.
When you're a hammer, everything looks like a nail, myself included. I'll tell you about my background in a sec. But I think what happened then was that the areas that are easily addressable if you're not an insurance person are the front end distribution technology. Like, my goodness, could the industry use an upgrade in terms of UI, UX, right? So that was accessible. Simple insurance products. Like, if you think about them, the early players were almost all simple monoline products, right? fixing the distribution, and then back office, right? Like fixing digitization of paperwork is the same problem in every industry. Insurance just has a lot more actual paper probably, right? So those were the two areas that were addressable. So what was left as a big hole was sort of the product piece, like the insurance product, the regulated product. So my background is in insurance product management. I have 15 years of experience in the area. I started at Progressive, and then was at Plymouth Rock, and then was at Liberty Mutual on the personal line side for about the first half of my career. And then on the commercial side, I most recently spent 6 years as an SVP in commercial product management at Liberty. Learned a lot. Yeah, I learned a lot along the way. And so, so that's kind of why when Jay saw this problem and when he told me about what he was thinking about, why it seemed really exciting to me, because here's an underserved market that needs a product solution. There's nobody else who's going to build it. There are all kinds of structural reasons that stop carriers from doing this easily. And we can build something that matters, right? And so I think that's, hammer and nail. That's sort of how I ended up here, right? And I think we are seeing a wave of insurance founders stepping into the entrepreneurial space, and I think that's really exciting.
Yeah. So did that create some complications or gaps because you didn't, the two of you together weren't also like software engineers?
Sure. So my background's in product, and Jay's is in customer experience and corporate finance. Both very helpful, but neither of us is super good with the code. Like my tiny bit of Python is pathetic. So we were very lucky in finding some people who knew what they were doing. So our lead software engineer, Philip Kwong, is a multi-time successful startup engineer. This is probably like his 5th go around. He knows what he's doing. And we've got a great engineering team under him. And then Mel Rainsberger, our designer, if you've seen any of our like adorable videos and all
it's really nice.
Yeah, anything pretty I didn't make, neither did Jay. But Mel has just a great eye for, she's UX designer primarily, has a great kind of eye for what works and what's usable, and for customer kind of branding and talking to the customer as well. So Mel had a little insurance expertise, and then a lot of experience running her own business in this space before she came to Surround. Philip had a lot of experience building and rebuilding kind of startup code bases, and under their leadership in those two areas, I think that's really rounded out our team. But you got to hire for the things you don't know how to do, like learning how to do that sort of stuff doesn't make a lot of sense.
Yeah. And you had more than enough on your plate. That was also hard, that you can't do everything.
Yeah, there was this whole build an MGA thing, which has nothing to do with like the small P of product. When you're talking about like a SaaS platform or something,
Well, let's talk about that. So that's because there's a lot of richness in that story. And when I heard someone the other day that was like, you just set up an MGA. I'm like, if you hear the word watch out for what you're about to hear.
Yeah, I mean, just filling out the paperwork to legally set up an agency. Okay, I'm not going to tell you how long it took me to figure out which paperwork to fill out, but but like the just to get to an MGA that you can actually offer products in is not a just, right? Not at all. Especially if you're trying to design a unique product as opposed to sort of distribute a product from essentially a wholesaler or carrier who looks to work through MGAs or MGUs. I mean, it's a 3-part, typically it's a 3-part relationship. You, a reinsurer, and a fronting company or issuing carrier sitting in between. So you got to get those relationships in play. And what's hard as a startup, unless you're like vastly independently wealthy, which would make this all a lot easier, is that you've got like this kind of spiral staircase you need to go up, where you need to raise some money to show that you've got enough staying power to make it worth working with you, to make like the reinsurers and the issuing carriers want to work with you. But then you also need to build enough of the system so that the investors want to invest because they see you're doing something, and you need to do enough of that to kind of get more money. It's just this, like, you got to do it a little bit at a time, and it's very, very complex because of the number of relationships and the fact that you're like, 2 people in a 10-page PowerPoint negotiating with $50 billion reinsurers.
Yeah, right.
Not easy. And then even after you get all of those agreements signed, you got to build out all of your software. I mean, we have a full-on policy administration system and an intelligent layer over top of that. We have like the guts of a full-on carrier, even though we're not licensed as one, and we needed that to do what we were doing. So we had to build all that. And there's also the regulatory process. Massachusetts was our first state. We just launched in Massachusetts a month or so ago. It is not the easiest state regulatorily. These are admitted products. There are 3 filings. It's not easy, easy.
Yeah. I was just talking to someone the other day, and they were saying the MGA approach is a great way to test product market fit and distribution, like all those things. But if you think about it, you have to build out almost or inclusive of everything you need as a carrier. Maybe not every back office function or actuarial in the same way, but you have to build out a lot.
You do.
But your economics are awfully close to what they would be for a broker who's building out none of that stuff.
Yes.
They have their own costs, but it's
right.
So it's a good experiment space. But it's not one to take lightly. And again, to that word, like, oh, you just set up an MGA, is like, no, it's actually a really big undertaking.
I snapped my fingers and it appeared.
Yeah. Is that not how it happened?
That's exactly what it was like. No, I mean, people say all kinds of crazy things. And all right, so now I'm going to make an argument that I don't know if this is going to work. Let's try it.
All right.
So margins can be awfully thin for MGAs, right?
Yep.
And the more competitive the product space you're going into, like head to head, you need incredible pricing sophistication because that's all you've got. The thinner your margins are likely to be, and the less likely you are to be able to make the economics work well, unless you can raise boatloads of money and then you're sitting on so much capital that you have time to figure things out. And that moment is probably past,
Right.
I don't know, but possibly. So one of the things that we did very intentionally was we picked a set of products that are not competitive in that way. They are not. And you know what? If you're choosing a product space that is not competitive, not in the sense of there's no demand, but in the sense of there's no supply, you don't actually need really fancy pricing and underwriting. You need some basic pricing and underwriting and a whole lot of data collection so that you can build pricing models that are complex as soon as you have competition. But it also leaves a little bit more margin on the table for everybody, right? Because you have to spend $2 billion to try to drive people to an auto insurance product that's exactly the same as everybody else's, right? So in some ways, being creative, I think, also helps the MGA model to some degree. It helps all the economics work some. But I would also say, do you want to be a full stack carrier? Do you want to be an MGA? We always throw that out there like, oh, I've sat on a lot of panels where it's like, well, which would you choose? And I'm like, well, I would choose to be like, to have a vast pool of capital available to me and then I could do whatever made the most sense, but that's not realistic for most startups, right?
Yeah.
So, I mean, given the statutory capital requirements, which is just we were talking about this before, right? But it's just capital you essentially just park, which is not a great use of money. You're probably going to start out as an MGA. So like, you got to make the best of it and make sure that you've got really good partners that you're excited to work with and they're excited and they'll hang with you. And hopefully you make some money for everybody and put a great product out.
Yeah. And if you did start as a carrier and you park all that capital and you haven't actually proven out that the business has legs, then it's not just parked, but it's highly risked.
It's highly, well, you know what's so strange about it though, and I mean, I can see maybe why they're doing this, but some of the early insurtechs that have really struggled with cost of acquisition and loss ratio as well, they are reinsuring such giant chunks of their book, in part for the stability of that capital and making it kind of stretch further, that in all honesty, even if they did start making money, they wouldn't be making a whole lot of profit because it would mostly go to the coffers of the reinsurers, right?
So effectively, they're an MGA without a fronting carrier.
Yeah, which I mean gets rid of the risk of a fronting carrier. Some of them are great, some of them are thinly capitalized and not as great. But it creates a whole different set of risks and complexity where at the end of the day you sort of say, is it worth it? I don't know. I mean, the story's still being written, right? But it's sort of an interesting point. Like when you reinsure it all out, you're not actually benefiting from being a carrier in some ways. Yeah.
Yeah. I mean, so it's to the point, there is no single answer.
No.
And the answer for a company today may not still be the answer for them tomorrow.
Yeah, for sure. And then there's all sorts of other things we didn't even talk about, right? Like, if you're intending for an exit rather than building to a multi-billion-dollar company, the multiples on a broker might well be better than the multiples on a carrier. There's
Sure.
that piece. There's the piece of the better use might be to build your own reinsurer and to not keep the primary layer. Maybe you should set up a captive. This all gets very, very complex quickly, and you may do different things in different states depending on the risk profile, right? It is not simple, and there is no easy answer. That's for sure.
But so on the acquisition cost piece of it,
that
you mentioned, I think that's an interesting one for you, because often in the insurtech carrier, whether that means MGA or full stack space, it's, we're going to go direct, or we've got this distribution play. And for a lot of them, they've come around and said, and we need agents to help.
Right.
And that's, Lemonade's done that. That was part of Neptune's business really early on. There's a number that Next is appointing agents now, after having this robust direct solution. So you're starting that way. It's still not easy to build out, but it sounds like that was always part of the conception versus like, ooh, we can't make the acquisition cost work, so we need someone else to do the selling for us.
Yeah, I mean, I think there are two things. I mean, the first is just sort of like kind of, it's obvious, but I think people sometimes skip over it. Like I've heard people say things like, oh, well, it'll be cheaper if we can sell our product for cheaper if we do it direct to consumer. And I'm kind of like, if you disintermediate a channel, the agents, you actually have to do the tasks that the agent was doing, which includes selling, which is actually not cheap. I mean, if it were cheaper to go direct, then it would be true that most people would be with direct insurers. The vast majority would be, because the price would fall for direct insurance versus agent sold insurance, right? Like economically, this isn't true. So, when we started looking, we originally thought we might be direct, and we started doing some customer research, and we were kind of like, honestly, all of the moments where this is easy to sell are moments that are about human relationship, right? They're about an adult child moving out of the house. They're about parents being consumed for their concerned about their child. They're about borrowing a roommate's car and wondering what happens, right? They're about the hard sell at the rental car company when you and your friends go on vacation, back when people did that, right? And none of you has insurance, right? They're about getting your first gig when you've got a full-time job and you started a little copywriting business on the side. And those are not super easy moments to get directly, but they're moments that happen in every agent's office many times over again and again. And the agents are standing on this burning platform where they, the ones who are a little forward thinking know they've got to do something different, right? Or they're not going to perpetuate their business. So it was kind of that combination of things. But yeah,
that's a good point. I mean, you said Progressive's $2 billion ad spend. Like, they don't just write, there's that word just again. Just spin that up, and then suddenly they had billions of dollars of premium coming through. They drive a ton of active, and GeiCo too. So you're competing with that and all the Google AdWords and Facebook ads that people are spending on driving up the rates. It's not free.
It's not, and it's not easy. Right. I mean, I'm not saying there's anything wrong with selling direct to consumer. There's nothing wrong with it, right? It's a great channel, but it is not the obviously easier or obviously cheaper channel. It's just the channel that if you're entering the space as a successful tech entrepreneur, it's the channel you probably know. Right.
Yeah, that's a good point. Yeah.
I mean, nobody sells apps through agents, right? So,
I keep hearing the Shopify of insurance, different startups using that term. And I'm like, well, they're all different. So I don't know which one is actually the Shopify of insurance, but it's not that simple.
No.
The process, sure. And you can do that cheaper and no question. But there's a whole lot other to feed into that process, a whole lot of other effort that goes in.
Yeah.
Kate, what words of wisdom do you have, parting words for people, or things that you're thinking about as you guys look forward now that you're up and running?
Yeah. I mean, I think the word of wisdom that I have is for people who are still sitting at carriers, who have thought about doing something different or about taking a step into the entrepreneurial world. And it seemed enormously risky before I did it, and it has been so worth it. Like, you will make things work, even if your business doesn't work. Like, even entrepreneurs I've talked to whose business has failed, still thought it was an enormous sort of personal thing to have done, to have built a business, right? To have created something from nothing. Like, the world needs your creativity more than it needs you to sit in another steering committee meeting tomorrow.
Yeah.
So just do it, take the leap.
Even though you said just.
I did say just all you need to do is give up your salary and benefits, and then work for free for a long time, and it'll be fantastic. And there is a certain level of financial privilege and all of that, right?
Yeah,
for sure.
You have to be able to do these things.
You have to be able to do things, but of those who are able, and many in the working for insurance carriers are making good money and are comfortable, right? We know what the salary structure looks like in the industry. You can do it. Don't assume that you can't.
Yeah,
you can.
Yeah, that may be why parents are paying bills into people's 40s. So the startups. No, but it's a fair point, and I guess that's part of the risk aversion thing. That is, it's not just like, what if this doesn't make it? And I've given up, my ability to pay the mortgage or whatever. It's scary, and that's a justifiable, real concern to have.
It is,
and that doesn't mean that you can't.
Yeah,
eyes wide open on it. That's all.
Yeah, exactly.
Kate, it was great. It was really good to hear more of the story and honestly the purpose behind it. I think that's one of the biggest reminders, is don't just do it. Like, there has to be a reason for it, and if the reason is real and resonates, then you can create something real that will have success. It's great. Thank you, and good luck to you and to Surround. It'd be great to see you guys thrive.
Yeah, thanks for inviting me on. It was great talking to you, Bryan.
Great. Thanks, Kate. Thank you to Kate for joining me for an episode of the show and talking about Surround Insurance, what they're trying to build, why they're trying to build it. It's so important. That's really crucial. You have to have a reason why you exist. And there's a very strong one in Surround's story. I love that. They're really thinking about that life cycle, that journey that a young person has as they come out of the nest of their parents' support, being part of the insurance that their parents have, and then doing their own thing, going off on their own. What do they do, right? And thinking about how that impacts the agent, broker, whoever that sold the policy to that family. Yeah, they're still keeping that core policy, but it's smaller now. It's different. And at some point, that policy will not continue on. Maybe because the person retires in another state, or unfortunately, at some point, we all die. So what happens to that account? Well, it's lived on in another way, generationally, but are you a part of it? Do you have the products to stay a part of it? It's a very interesting concept. And I have to say, kudos to the team at Surround for creating it, but it's also like, well, why didn't we think of this sooner? There's a lot of that going on in insurance right now. And that's why sometimes it takes a startup to rethink a problem we've all been living with, but maybe just sort of got used to because it's just part of the game. So really interesting. I wish the team at Surround, Kate, everybody, lots and lots of luck, because I think that helps perpetuate the industry, keep it important, keep it focused on the lives that we're standing by and covering, and supporting those who go into the office every day, whether that's in their home or in an actual building, to represent the various insurance companies that are out there and to try to meet the needs of people who have the risks that need to be covered. So thank you to Kate, to Surround. Thank you to all of you for watching or listening, depending if you're listening on audio or watching this on YouTube. It's great to have you here. I hope this has been valuable for you in your journey. Please do subscribe and review or rate the show, but also share it with someone that you know and care about in the industry. Maybe there's someone who would find this interesting, who is thinking about, well, how can we do better? And these kinds of conversations with all the guests that I feature in the show could help on that journey. So tell a friend about the show. You can send them to future-of-insurance.com. Tell them to click on podcast at the top. And of course, they can explore the books, the Future of Insurance series, and pick those up. If they're interested, you can do that too. If you haven't already, it's available at future-of-insurance.com or from Amazon on Kindle, in paperback, hardcover, and an Audible. So if you want to listen while you work out or work or clean the house or whatever you want to do, maybe you commute, if you're into that kind of thing again, you can listen to the book as well. So, or both the books, actually, they're both on Audible and all the other formats. All right, I will leave it there. Thank you for your time. Thank you again to Medallia for making this episode possible, and to Upbeat Music for supplying the tones and tunes for the podcast. All right, everyone, take care, and I will see you next time for another great and hopefully inspiring episode to help keep pushing this industry ahead. Thank you.